Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. It's Wednesday, January 13th. What I want to talk today about is a couple of bubbles. Let's start with the stock market bubble. Are we in a bubble? Maybe it's just, where the stock market's headed. I think we're in one of the biggest bubbles in the history of the stock market. Now, is it going higher from here? Yes, it's going higher from here. This bubble is going to be blown up bigger. It's going to be blown up bigger. We're going to head higher. The trend is up. You never really want to bet against the trend. The trend is headed higher. Now, can we have a pullback? Yes, I'm hoping for one, because right now I'm out of it. I want to get back in. Because we're going higher. But we don't get the pullback anymore. Do you ever notice the littlest of pullbacks are being bought? They're just being bought. Everybody's buying the dip. Buy the dip. And it's been working. It's going to continue to work. How high do I think the stock market's going? Well, I think it's going past 40,000 on the Dow. I believe that. Maybe up towards 50,000. We're going to continue to print money. You see, this market is not real. This market is distorted. Do you know where the stock market would be if there was never any QE 1, 2, 3, 4, 5, 6, whatever QE we're on? We keep quantitative easing. We keep printing money. The free money's flowing everywhere. It's keeping the zombie companies alive. The Fed is distorting the market. Now, the market is really a very sick animal. It's very, very sick. I mean, the market's supposed to reflect how the stocks are doing, how the businesses are doing, how the economy's doing. It has nothing to do with that anymore. Those days are long gone. The Fed is distorting this market. The only thing that's going to make the market go higher is more debt. You see, debt is like the heroin that the market needs. And you know what we did last year? I think we started out in 2020, we started out somewhere around $24 trillion in debt, got up to 27 trillion. But the Fed started out about 3 trillion, and they're up to 7 trillion on their balance sheet. Now, what is this trillions and trillions of dollars doing? Well, it's finding its way into the stock market. It has to go higher. There's no other place for the money to go. It funnels into the stock market. But without all this debt, where would the market be? My opinion, it'd probably be down around 6,000 on the Dow still. 6,000, but we're up at 31,000. Are we going higher? Yes, we're going higher. Are we in a bubble? We're absolutely in a bubble. This is going to go down probably as the greatest bubble ever, because we're going to blow it up even bigger. We're going to get that debt. You see, the stock market is the sick patient, but we're going to shoot it with heroin. It's a drug addict, and it needs that heroin. The heroin's the debt. The stock market's a drug addict, and we're going to have to shoot it with more heroin to get it to get up and dance. If you give it more heroin, it's going to get up and dance. It's going to get up and do the party dance that everybody wants to see. Everybody wants to see the stock market go higher. 40, 50,000 on the Dow. It's going to happen. You're going to see it's going to get up and dance. But you know what? It takes twice as much heroin to get the market just to stay the same. So they really got to inject that debt. They really got to print that money. I'm telling you, that 7 trillion that's on the balance sheet of the Federal Reserve, it's going to double probably this year. Probably 14,000 by the end of 2021. What's that going to do to the stock? It's going to just make it go higher, much higher, much higher. So don't bet, don't short it yet. It's going to change at some point, and we'll wait for that point. And if you subscribe to the channel, I'll let you know when that point is. But it's not yet. The trend is still higher. Yes, we're going to get a pullback. At least I hope we are. I want to buy the next dip. I'm a buyer of it. The trend is still higher. Now let's talk about another bubble that I believe we're in, and that's the real estate bubble. Now, a lot of people say, Mike, we're not in a bubble. Well, let's think about it. Were we in a bubble in 2007, right before the houses came crashing down? Yeah, I think we were. Well, do you realize we're higher now than we were then? And we were concerned about debt. Debt was the problem back then. There was too much debt. We have quadrupled the debt. So I think the bubble's even bigger in real estate. Now, where would real estate mortgages be? Right now you can get You can get a 30-year fixed for about 2.5%, let's say. 2.5%. Who's lending that money? Oh, it's not the banks. No. The banks originate the loan. They then turn it over to the Fed. The Fed owns 1 out of every 3 mortgages. There's no one else crazy enough or stupid enough to lend money for 30 years at 2.5%. They just aren't. There's no one like that. And if the government had a brain, they'd tell you that we're going to run inflation over 2%. Why would we give you a loan at 2.5%? There's no money to be made. But the money to be made is in the 30-year mortgage. That's where you can save money, you can make money. Now this is what keeps pushing the prices higher. But think about it. We have an all-time record low on interest rates, all-time record low on inventory. Where's the upside? Where's the upside from here? Okay, what we're running out of, even with the low interest rates, we're running out of people that can qualify to buy a home, let alone build a home. But the home ownership is becoming unaffordable. It's not sustainable. See, that's the problem. The problem is these prices are not sustainable. We're running out of purchasers. So yes, we're in a bubble, and the bubble's going to come down. But it's not going to come down yet. Why is it not going to come down yet? Because of forbearance. Forbearance. There's 5 million people living in homes and not paying their mortgages. I mean, I'm sure it's great for them. They don't have to pay the mortgage. They can save the money, put it into the market, maybe put it into Tesla, maybe into Bitcoin. But they don't have to pay their mortgage, 5 million of them. We can't kick them out. Why? Because of forbearance. How far down the road are they going to kick the forbearance? When the forbearance comes to an end, that's when you're going to see the market crash. It's going to crash pretty hard. Let's just say half of those homes. Let's just say 2 million of those homes come onto the market. You know what's going to happen to inventory? Inventory is going to go from a record low to a record high. You know what's going to do to prices? I don't care if they lower the interest rate to 0% on a 30-year fix. It's not going to help. There's going to be this downward pressure. Downward pressure. Now, a lot of people say, oh, Mike, companies, they want to buy up these homes. I don't think they do. I think the companies already own the homes. Companies like BlackRock, they own a lot of homes. They want to dump them. They're getting ready to get out. They're getting ready to exit. They're not getting ready to buy. No, I don't think so. I don't think so. This is my opinion. You may have a different opinion. You may think real estate's going to double from here. And if you do, well, and I'm not saying that's completely impossible. You print another 10, 20, 30 trillion dollars, maybe hand it out to people for free, get a little UBI going, maybe we can get those home prices to go up. You know, in Denmark, you know what Denmark has? They have this thing. They have a 20-year mortgage for 0% interest. 20-year loans for 0% interest. Now, that's keeping their houses up right now. It is. It's keeping them from dropping. They don't want them to drop. No one wants them to drop. The government doesn't want them to drop because then they don't get the property tax revenues. They need those property tax revenues to run the cities, to run the states. That's very important to keep house prices high. We can't have them come down. Maybe we'll go to 0% for 20 years. I just don't think it's going to hold the market up. Yeah, I know. It's being propped up, but I think it's artificial here. Now we'll see. At the end of 2021, I say we're going to be down 20%. 20% 12 months from now. And that's without even the forbearance hitting. Now this takes time to play out. This isn't going to, 20% is a big move, and that 20% down, it's going to wipe out a lot of the equity in the homes that people have. The average equity in a home is $194,000 in the United States. A 20% drop was going to cut that equity. Not 20%. It's going to pretty much wipe it out. Wipe it out because they have $400,000 mortgages with their $194,000 equities. But this is going to take time to play out. How soon do I think we're going to hit a bottom in real estate? That's still probably 3, 4, 5 years away. Real estate's not like the stock market. Stock market can hit a bottom tomorrow. I mean, that can go down 50 to 90% in one day. Stock market, hey, click the button and you're out. You can't just click the button on a house and get out. No, houses take time. It's going to take time to go down. But I think we're in a stock market bubble. I think we're in a real estate bubble. Now, I do think the stock market bubble is going to get blown up from here bigger. I do. I think there's some room to blow the stock market up bigger. Now, houses, I don't think there's that much room on the upside. You think about it. I mean, we're pretty high right now. I mean, I don't see the housing market going up from here. I see it shifting from a seller market into a buyer market, and then I see the prices coming down, coming down, coming down. We'll see if I'm right, check back a year from now, and we'll see if we're down 20% on houses. Now, I do also think the stock market's going to crash sometime maybe this year, probably this year. Maybe I think we're going to get a big pullback if Biden gets sworn in on the 20th. Look for a pullback. Now that's a dip you want to buy because I'll tell you, Biden's going to print the money. He's going to dump it in there. He's going to give everybody $2,000. Not one time, not two times, not three times. He's going to go UBI, Universal Basic Income. This is just a prediction. I believe that's what he's going to do. So he's going to print the money. So look for that market to blow up, the stock market, not the house market. The house market's going to stay flat until it drops. It's going to stay flat and then it's just going to drop. And when's it going to drop? As soon as that forbearance is over. Now, you're going to hear about forbearance. You're going to hear about them kicking the can down the road. They're going to extend it out. I believe that. I believe they'll extend the forbearance out. I believe they'll extend the eviction moratorium out. But once those end, look for that house market to come down. I'm Tall Mike. If you like this, give me a thumbs up. Hit to subscribe. We'll talk again real soon. Have a great day.